Okay, thank you. This is Dr. T here. I would like to share today's topic about how to actually form a defensive stock portfolio, mainly through like Singapore REITs and the dividend stocks, which are more defensive in nature. Because currently we know globally we are afraid all kinds of black swans. Wow, high inflation. Wow, interest rate keep on going up. Are you Russian, Ukraine? You don't know how long you'll fight, for another few more years, and then who knows later on what if China, Taiwan, another new, possible issues may come out. Yeah, so we worry. The market up, down, up, down, up, down. All right, so that's why some of you, right, so worry until they're not invest at all. That's why a few asking, Dr. T, right, should we buy low, right? Because we worry buy low may get lower. Or Dr. T, should we wait for recovery? But when you recover, then you say, sayang, why we do not want to actually buy, all right, when it was low. Of course, if you know you will recover, definitely you will buy earlier. But the question is, no one know the future. Exactly, that is the nature of the stock market. Stock market is forward-looking, right? For example, last night we know that the inflation start to drop from 9.1% to all the way to 8.5%. But this is just a monthly trend, right? It doesn't mean anything at all, right? Who knows, next month it could actually recover to another new high, right? But this is at least, right, I would say the very first important signal. And current market actually is very tricky, right? Because you thought it may entering recession soon, but you know that NASDAQ officially back to a bull market, because a more traditional way to define bear or bull is when the market from the peak drop by 20% or more, then they say it's bear market. But if follow the same logic, right, from the lowest point roughly 1 or 2 months ago, right, NASDAQ has actually gone up over 20% so far. So, but Dr. T, so are we in a bull or bear? So later on, Dr. T will share with you, all right, the market outlook, right? And in fact, using Singapore as an example. And in fact, I've prepared 4 of these stocks, not only that, because they are just individual stocks, right? You need to be protected by a sector, like the earlier speaker talked about, right? The REITs index, and you need to be protected by entire country. When the sky fall down, let's say there's a crash, there's a global financial crisis, right? Do you ask yourself, do you think your own country, right, would continue? Dr. T, of course, life still goes on. Then why you're so frightening? Dr. T, I cannot help it because every time I check the share price fall down, I cannot help but feel frightening. So you're human. So perfectly, you're normal. Unfortunately, normal people cannot make big money in the stock market. Why? Because stock market is designed for abnormal person. I'm not saying that you have to be abnormal. I just saying when it comes to investing or trading, you need to know about your personality. So later on, I will introduce 2 main strategies. One is called average up, one is called average down. And in fact, both can work perfectly with today our topic here on defensive portfolio. Okay, without further ado, let's start from here. Right, my subsequent presentation and all my sharing is for educational purpose. And Dr. T will share with you, right, the strategies, and you can make your own decision. Making your own decision is the most important because no one would know the future, what happened tomorrow, 1 month, or 1 year from now. But if you can align the strategy to your unique personality, right, that will actually help you a lot, Yeah, for example, the last few months, right, if the market actually melt down, right, in US, in Malaysia, or so on, are you frightening? And if yes, why? Right, is it because you buy a lot of cyclical stock, right, and stock probably without fundamental and so on? So that's why today we are focusing on a portfolio of defensive giant stocks. Okay, and this is just a quick introduction of Dr. T. But actually a owner of this investing blog, ein55.com. Feel free to drop by there. A lot of learning materials, learning video, right? You can learn further. But today, Dr. T specially prepared this special educational video here, live to share with you how to actually fight against the black swans mentioned earlier on. Huh? Okay, so for those who know me for the first time, right, let me actually give you some introduction of my styles. So technically, right, you need to look for a portfolio of stocks to form so-called some form of diversifications. It's like form a football team, right? Goalkeeper is of cash, but you cannot keep cash all the time because inflation will actually erode, your this cash value over time. So we need to form strikers, looking for capital gains. Midfielders, looking for capital gains plus this dividend return. And more importantly, today our topics, defenders. A lot of people thought defenders are just for the dividend collection. Not quite true. In fact, today, the defenders or dividend stock or even Singapore REITs, they can be strikers as well. They can be midfielders, meaning you may also position them for the shorter term, not just on the long term. But of course, for shorter term, trend following is actually important. Huh? Okay, let's learn further from here. Okay, my style is very simple. Looking for giant. Giant, not necessarily the largest stock, but it has to be strong internally. Even a small cap can become a giant, but don't buy the giant as it is. Wait for the giant to fall down. For example, wait for the price correction. So in the last 6 months, globally, there's a significant correction. Nasdaq, this S&P dropped by over 20%. At the same time, Singapore, is still relatively stable. In fact, today looks like achieved another new high over 3,300 points. While regional market, including like Hong Kong and so on, although not today our focus, remains at the lower optimism. Huh? So it's a good news to see a giant fall down, but this is theoretically correct. Say Dr. T, I can actually buy low, sell high. But you buy low, you might get lower. So that's why better to wait for the giant to recover. You not need to let it wait until it recover to a new high or new peak, but it must form some form of a base. Okay, yeah. So it means the fear have to be fading. Yeah. So it looks like we are seeing that kind of possible light at the end of tunnel. So that's why some people want to plan for the bottom fishing. So what I can say so far is minimum, we got a midterm bottom fishing. You can look for it. Minimum, you can get it. But whether the long-term bottom fishing or the ocean deep fishing, that one, is still not clear at the moment. Yeah. So that's why whoever positioning a current market right now is more for the short term to medium term. But in order for you to all the time frames may be considered today, I especially prepare on that talk on defensive portfolio, meaning short term, medium term, long term, all may consider. Okay, yeah. So that's why that portfolio allow you to remove the fear, remove the uncertainty of the market up and down, because a lot of people thought must know exactly where's the low and high to make money. I would say yes, if you have that kind of capability, that'll be good. But a lot of people, what they are lacking is the ability to take action to just buy and hold. Okay, so later I'll show you various mechanisms to make money. So in short, looking for giants, not just one giant, a portfolio of defensive giants, and then I patiently wait for it to fall down. And you can apply either average down strategies, meaning using contrarian approach, or using average up strategies, meaning integrating with a trend following, integrate trading into investing. Okay, so this is Dr. T Optimism method. I've got 55 investing styles. This is one of them. Technically, you need to know a value. Once you know the intrinsic value, the price, the low and high, you can define using scale of 100% to 0%. You can buy when it's less than 25% optimism. You can hold it within 25 to 75% here. You can sell when it's above 75%, and then you can wait for correction again to buy low. So these are the cycles of actions. Everything, all the investment move in cycles, even Bitcoin, even bonds, even economic cycles, even your greed or fear, all move in cycles. Reason is very simple. You're human. Human got greed or fear, right? So they will take turn, right, to actually create this kind of a low and high patterns. And you have different personalities, right? Basically, there are 4 types. A, short term in terms of months, right? B could be medium term, could be months to years, and then the C could be, this longer term, could be, a few years, and then D could even the lifetime investing. You technically can buy and not need to sell at all, as if like property. Who says must buy low, sell high, right? If you look at your own investment, right, whether you're in Singapore, in Malaysia, right, some probably think, hey, Dr. T, my best investment is actually my property I bought like 10 years ago. Did you buy low, sell high? No, Dr. T, I just buy one time and then I forgot I got a house. I just stay, inside there. And looking back, I actually regret I should have bought probably, a few more. Whenever I got money, I should actually buy property. But number one, you may not have the capital to buy so many property. And number two, capital is huge. So therefore, you probably worrying whether that decision is right or wrong. We are talking about hundreds of thousands of dollars. We are talking about over $1 million kind of investment. But luckily today we got the new this alternative to property. This is called stock market. And the closer to the property market is actually called the property stocks, or more specifically is the REIT, R-E-I-T. Yeah, so later on this will be one of the highlight in the next subtopic. So think for the winter time, when other people are fearful, as the Warren Buffett says, you need to be greedy. When one day the market actually become greedy, like during summer, become very hot, you want to sell high, I'm not stopping you. You want to actually buy and hold, I'm also all right with that. So technically, these are the few mechanisms to make money. You can buy low, sell high. You can make money over here. You can buy low, right, and hold long term, not need to sell at all. Also can make money. You can buy and hold and collect dividend, like just now earlier speaker talked about, right, the SRT, right, that the REIT, you can collect 5.6% dividend yield. Why not? Okay, but your personality, right, may not able to, right, align with all the strategies. So that's why, including you can buy, for the short term, right, or it may fall down. You can even do short selling. Short selling meaning when the share price actually fall down, you can make money, although that may not be our strong focus for today. But in short, what I'm trying to say is there are hundreds of ways you can make money, but some are more cyclical, more volatile, right? Some are more speculative, some are more defensive. So that's why today, since the market is very uncertain, right? So I specifically focusing on that defensive portfolio, meaning the worst case, the sky fall down, you can still collect your dividend as long as you don't, check the share price every day. Go and scare yourself. Okay. A lot of people, why they miss opportunity is more like their own so-called fear or greed come at the wrong time. Okay, so that's why most people is actually buy high, sell low. Okay, which is a secret to lose money. No need to teach, right? Because by default, okay, this is the nature of the most people. Okay, knowing is one thing, but that's learning together, right? In the next half an hour, exactly how to do so. Okay, if you buy at the lower optimism here, less than 25%, your upside is more than the downside. It's like 75 to 25. It's like you're using $25 to exchange for $75. This is called the risk to reward ratio. Yeah, so later on, we apply this technique, one of the T55 styles, and the remaining 54 styles, although today I don't have time to cover it, but later on, if we got extra time during the Q&A, I could actually share further. Okay, so let's look at our next subtopic on market outlook, right? Focusing on Singapore. A lot of people thought must buy many individual stock. Dr. T, tell me I'm prepared to write down a list of the stock to buy. Actually, the easiest way is to buy the entire country. For example, this is 30 STI, right? We are index component stock. It can give you 3, even up to 4% dividend yield right? At the same time, you diversify to 30 stocks, including your top 3, DBS, OCBC, and UOB banks. Right? Not enough, we got Wilmar, we got a Singtel. Okay, and that 3 major banks already contribute to 30% of the Singapore STI. But even one day, assuming the sky would fall down, global financial crisis come, they say the 1929 Great Depression may repeat itself. Do you think all the 30 Singapore largest company would all go bankrupt? Think twice before you answer that. Right, Dr. T, I know you will not go bankrupt, but the feeling is not good when the share price drop by half. Yes, that's why if you can buy lower prices, right, or lower optimism level, that will give you a higher safety margin. But we also don't want to purposely buy low, sell high, and buy low, get lower. We want buy low, sell high, but not to the extent of buy low, get lower. Look at this chart here. This is the optimism for STI. In fact, last time I was invited 2 years ago to give the same talk. You see, in September 2020 during pandemic, looking at this chart from 0 to 100% optimism, you look at the last 20 years, right? 1997, after that, the Asian financial crisis, you can buy low. Year 2000, the dot-com bubble can sell high. Year 2003, SARS and Gulf War to buy low. Year 2007, you can sell high. And then 2008, 2009, subprime crisis after QE1, you can buy low. Singapore, you can sell in year 2011, 13, or 15. You never sell, no need to sell at all. Wait for the pandemic. Dr. T, how come your techniques seems like you know the future? Frankly speaking, I don't have a crystal ball, but the optimism method, is a smart method. It's a probability calculator, meaning when it's at the low enough, you don't need to buy the lowest. You don't need to sell the highest. You just buy low enough, like along the green line. Or to be more general, you can buy anything below the yellow line. Yellow line is your intrinsic value. Understand? Yeah, so Dr. T, EIN55 intrinsic value over here. In future, you can learn further from Dr. T. Today is just a short presentation, right? But Dr. T already missed it already. Pandemic, I'm so Kiasi until every day worry about COVID. So I did not take any action. Fine, good excuse. How about we let the time move 2 years from now? Now move to year 2022. This updated until yesterday, the prices. Okay, this after the Singapore, this is National Day. So optimism is 44%. What does it mean? You are investing $44, exchanging for $56. That's the meaning of optimism. And if you can take action 2 years ago in Singapore STI, protected by 30 largest company, and the worst case, you can get 4% return as if like a bond every year. This is using $24 to exchange for 76. You see, low, they're not buy. And go higher, Dr. T already high, I don't want to buy anymore. But frankly speaking, it still give you discount. Although the discount may not be a lot. Anything less than 50% optimism, yellow line, still got 6% optimism discount over here. Don't wait until one day you go above the yellow line. When people not frightening anymore, when everyone back to the stock market, I no need to listen to Dr. T anymore lah. Just show hands to buy lah, because people don't talk about inflation anymore. If that one day come, do you think the market will still wait at the low for you? Probably not. So that's why you need to be different from others. If your competitors, if your friends, your relative, or whoever you don't know, they also, understand the same thing as you. They also read the news, okay? And so what is the difference of you from compare with others? So to make big money, in general, you need 2 techniques. Number one, you can actually do average down. For example, when the market dropped to low optimism here, even you do know the lowest is here, starting from the yellow or the green line, you can be like here, 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, 1,000. Understand? Yeah, so it means that this technique, the biggest assumption is, the price would not drop to 0. If you ask yourself, do you think Singapore SCI or don't need to go for too far? Do you think KLCI Composite Index also got 30 stocks? Do you think Hang Seng Index, which has about 66 stocks? Do you think the S&P 500, which has a 500 business in USA, do you think they all will go bankrupt, will fall to zero? If the answer is not, meaning this is a giant fall down, right, you just need to wait for the giant to recover. And if you do not know the lowest point, it doesn't matter. You can do averaging technique. But remind you, this is not dollar cost averaging. Dollar cost averaging is never care about low and high, buy everything. Right? At the end, your pocket not so deep, you're wasting your money. So that's why a smarter way of averaging is at least less than the yellow line. The good news, Singapore, STI right now is less than yellow line. You want to apply this technique, is possible. You buy at 3,000 points, right? Today is around 3,300, for example. Every 10% fall down, it can be 1,000, right? But how many of you can do that? Because you check a share price, Dr. T dropped 10%, Dr. T dropped 20%. Yeah, that's why 2 years ago, definitely you dare not take action, because this is against human personality. You are too normal. Normal people cannot make big money. Okay, this is for the abnormal person. But you no need to so-called act strong. So you can wait for recovery here. So when the trend is recovering, all right, you can actually gradually average up, no need to average down. Average up meaning while the optimism getting higher, when the trend is getting stronger, you accumulate in the uptrend direction. Although you are paying a higher prices, right? But your prices in general moving in a positive trend. It's just your actual return, the yield could be actually lower. Is that okay, everyone? All right. So we continue here. This is more on long term. This probably look at like a 10 to 20 years, right? Every 5 to 10 years, you can buy low, sell high one time if you want to, right? Although right now it's not a perfect time, but currently still at the lower optimism. So in general, this is still a better opportunity, upside more than the downside. How about Dr. T? All right, looking for the medium term. Medium term, every few months you can buy low, sell high. This 1 year ago, okay, actually it dropped to a lower optimism for medium term. Right now, Singapore relatively is a higher optimism. So medium term actually not as attractive, right? Short term wise, he has been bearish for quite a few months, and the good news is recovering above this so-called the resistance. Okay, the resistance which I'm going to share with you in the next slide using technical analysis. You can buy STI index, but not directly. You can buy like through ES3 ETF. Huh? Yeah, ES3 is one of the two STI ETF you can buy in Singapore. Right, so you'll pay you 2 times dividend payment every year. Right, add up together is around 4%. Huh? It depends on the share price. The higher the price, the yield will be lower. Huh? So so the last few months, yes, a break about 3,200 the resistance, which right now become a support, and even today, yes, break another resistance, which is around 3,003 in Singapore. Okay, whether it can break the 3,004, 3,005, okay, that has to be proven. But at least right now, for Singapore, it back to bull again, technically, huh? Yeah, but it doesn't mean the STI is more suitable for trading right now. We're talking about defensive portfolio today. We are talking about today, even you buy DBS, right, the largest company in Singapore. What if a DBS go bankrupt? We know the probability of DBS Bank go bankrupt as if like Maybank in Malaysia go bankrupt. I'm not saying it's impossible. I just say that probability is so low. Until some people may think probably need to wait for 100 years, not too sure whether it may happen. Even it may happen, you must see who's behind this DBS. Our Akong in the Singapore. Dear Temasek is a major sponsor, major shareholder. Right, today we are not talking about DBS, but later we can talk of a few more Temasek related stocks. Okay, right? So understanding your akong is behind, and what is your confidence level? Dr. T, my only regret is I did not know you 2 years ago. Otherwise, I would apply this method. Every 10 years, like buying property, one round, right? And I will remove all my fear, whether it's called COVID, whether it's called war, everything I don't care. When I see a low optimism, even I do not the lowest point, I just buy averaging down. Fine. If you can do that, salute to you. But the saying is not enough. You must actually do it. So that's why action taking is the most important. Today we're talking about the current situation at here. Not super low, but still relatively low, right? Medium term, short term, and long term. I'll say opportunity in Singapore right now is more for potential short term plus the long term over here, right? So even you do know the lowest point, all right, you can actually doing averaging like through the STI ETF. And recently in August, right, the 3 major banks reporting better result. Why? Because when bank interest rate going higher, the net interest margin or NIM will be increasing. Yeah, so that's why the bank interest income will expand, will be larger. So that one no need to think too far lah, Yeah, but the question is people worry about COVID, people worry about Russia-Ukraine war, people worry about hyperinflation. Okay, yeah, so that's why the fear, right, overtake all this. So that's why the share price in the last few months, right, have a difficulty to go up. So Singapore, in general, to be fair, is still more suitable for value investing. You want to make like big money, through like growth investing, may not be Singapore, right? Unless you go for individual Singapore stock, which is beyond the scope of today's workshop, right? You can actually in future, right, study like global growth stock. Today we're talking about defensive portfolio. So we are using an entire country to defend you. So it means today, in fact, right, this is already one of the possible portfolio, meaning you are not just buying one stock, you're buying a portfolio stock consists of 30 stock. Even you're limited in capital, you can just buy one, this ETF here using index. Is that okay? You don't need to buy 30 stock or every stock 1,000 on it. You just buy one index. If it's not good enough with 4% dividend yield, right, let's move on to the next topic here. Okay, now we move on to the REITs or dividend topic, because REITs, especially in Singapore, right, in general, our government actually can allow the REITs actually to pay higher, right, this dividend, partly because they waive the tax. Right, so one of the condition is they need to return back 90% of the taxable income back to the shareholders in the form of dividend. For example, it's called Capital Mall Trust plus a Capital Commercial Trust right now, it's called CICT. This is the largest REIT in Singapore. The sponsor is actually CapitaLand, and you worry CapitaLand may go bankrupt. Behind is our Akong Temasek. Do you think Temasek will go bankrupt? Then look further behind. Who is actually behind Temasek? Okay, at the same time, you're the unit holder. If you invest in CICT, right, you are the shareholder, the trustee representing your interest, and then they'll hire REIT manager, right, to manage the portfolio. These are the shopping malls in Singapore. Tampines Mall, Junction 8. If some of you come to Singapore, you should know it quite well. Now add in the commercial buildings, right? So right now, the retail shopping malls plus the commercial buildings, both combined together can give you around 5% dividend yield. Then they also hire property manager to deal with a daily operation, right? So that's why you are the shareholder, can kiao, no need to actually even ask for money. They can actually deposit the dividend to your bank account. No need to chase your tenants for payment. Right? You are the landlord. Except your landlord, you are the 0.00 something % of the landlord. Right? So in general, you no need to spend $1 million, but you must have at least some shares of the REIT, and then you can get return usually 4 times a year. So if you can buy 3 different REITs times 4 payment a year, technically you can have a 12 payments, right? 12 payments if you can align to 12 monthly payment. And one day if your capital plus a dividend yield, right, every month is more than your monthly expenses, technically you can say you're financially free. No need to actually looking for capital gains. Just dividend itself already can, become your retirement fund. But for some of you, it's still a long way to go. Why? Because your capital not enough. Why? Because you did not buy low enough. Because you need to buy low enough to maximize the dividend yield. So this is 30 STI. If you sorted by dividend yield, high to low, for example, dairy farm and the rest. But do not fall into the trap of a value trap. A lot of people, they didn't know, they thought buy the highest dividend yield. Then it could be big trouble. You may buy some junk REIT. You may buy some junk so-called dividend stock, which has probably over 10% dividend yield. You buy low, you can get lower, right, for the share prices, right? And then remember, dividend is always based on the past dividend. Past 1 year, right, assuming like Singapore Airlines can pay you dividend, right, before pandemic, but it also means during pandemic can pay you dividend. So that's why this is one of the main concern for dividend investing. You must make sure, right, the company can pay sustainable dividend. So therefore, it must have a sustainable growing business. It must have a defensive business. So that's why REITs in general in Singapore is a good choice. But there are over 30 REITs in Singapore. Not all are good ones. So this is called REITs index. So this comprising with 30 REITs. If you add up all the REITs, and guess what? You buy everything, and then the REITs can give you this kind of performance. But if you could, I would say better to buy at lower optimism, less than 50%. For example, year 2007, even you can buy the REITs, it can fall down by actually roughly 70%. You can still lose money, right? If you buy, such a strong portfolio. But if you can combine like an index for the REITs plus buy lower than the yellow line here, meaning less than 50% optimism. For example, in 2008, 2009, it happens before. And then in this year, 2020 pandemic, again, it dropped roughly by 40% one more time. Even as of today, you still got this discount, right? Optimism at the moment is 43%, right? Quite aligned to the Singapore STI. So this is called the sector index, the REIT sector. But you cannot buy the REIT sector as it is. Dividend yield is defined as dividend over the share price. So based on this equation, right, there are two ways you can maximize your dividend yield. One is actually looking for a company can grow the dividend. Or secondly, looking for entry with the share price like here or here. When your share price is the dividend is a constant, divided by share price drop by 40%, 50%, or 70%, it means your yield will be one of the highest, right? But this is theoretically correct, right? If you look back, so many good Singapore REITs actually fell down 2 years ago. Did you pick up a few? Right, Dr. T, I did not. And today, because I see the invitation that you're talking, so that's why I quickly joined. See, want to pick up some stock tips. It's never too late. But even today, I must say that upside more than the downside. But again, you cannot buy the REITs index as it is. You need to find this ETF. Okay, so here, the next one I'll show it to you. If you zoom into here, there's a strong, this REITs ETF. Dr. T would like to present to you. So it's actually listed around roughly 1 year ago. So you can see in the last 1 year, this is like a zoom in of over here. Do you see what I'm saying? Yeah, but because of history is shorter here, we need to actually refer to the REITs ETF here. The alignment of this SLT, this is CSOP, IH Singapore REIT, which the earlier speaker talked about it. Yeah, so the IPO is probably around like $1, right? Like a bond. Technically, you can view it almost like a bond. Why? You see the volatility very little, up down 5 to 10% the most. In fact, 2 months ago, this one the best opportunity, almost at a 10% discount from $1 down to around 91 cents. Right now, recovered to around 96 cents based on today's price. And if you look at the portfolio, the portfolio is not exactly same as here, but close. The differences is there are big four here. These are the largest four REITs in Singapore. Right. So we got Ascendas REIT, CICT, Mapletree Logistics Trust, and MIT. You see, these are the four, all got the something in common called Temasek. Okay, behind got Akong called Temasek. Each one of them is a 10% weightage of the index. Not enough, add in the number 5. Number 5 is called Mapletree, right? Pan Asia Commercial Trust, right? Also roughly 9%. If you add up the top 5, it's already 50% weightage, meaning the 5 stocks contribute to half of the this REIT index. And the best thing is all the 5 are the giant REIT in Singapore. But if you want to buy individually, right, probably say, Dr. T, this one need 1,000, this one need a few $100. Right, some of you, especially those low capital investor, right? Dr. T, I agree. I don't have $1 million, cannot buy property, but I don't even got $1,000. Right? So no more excuses. This is 1 unit. Even the worst case, assuming it come to $1. Worst case meaning you forget to buy, assuming one day go above $1. 1 unit will only $1. Dr. T, may I know how many units minimum I need to buy? I heard in Singapore, one lot is 100 units. Technically correct, but for this particularly SRT REIT ETF is different. In fact, good news for you, before that is minimum is 10 units for one lot. Meaning you got $10 already can buy. Of course, need to add commission. And I heard from the owner of this ETF here. Right now, the good news, the minimum is the same as a US stock. You can even buy 1 unit. But of course, no point to buy 1 unit, $1 lah. $1, you make another 100% return is another $1. Then your commission, probably already a few dollars. I'm just saying that, right? Even the worst case scenario, you don't have enough money. For example, you only got a few $100. You should not stop you from investing. Right? We like buy a durian tree, plant a durian tree. Understand? Every month, plant 1 durian tree. This month, your take-home pay $500. Right? Then $500, probably who knows? You can save $100 to buy with a 5.6% dividend yield. Right? If not enough, we got another $100. Can buy just now the so-called the STI ETF. Okay, go and compute that. You got money. Dr. T got 4 more stocks, right? Which you may consider, and you can apply average down or average up. For example, assuming you buy at $1, it dropped to 91 cents or 90 cents. Every 10% fall down, you 1,000. You think this one can fall down to $0? You wait for 100 years, not too sure whether it can fall down to $0. It's a giant. Giant meaning it can get injured, but you'll recover one day. Understand? And in fact, it's already recovering here. The resistance is 96 cents, and today is slightly above 96. So right now, it's not just on the average down. Right? You may need to apply possibility of average up. Yeah. So technically, right now, the discount is still given to you if you're using a longer term this REITs ETF over here. Right? So for analysis, you use a REITs index, but to take action, you're using the SRT. Okay, is it clear? This is listed in Singapore. It's called CSOP IH REIT SRT. 5.6% dividend yield, but of course, when the price is getting higher, the yield would drop. So that's why for those smart investors, right, the more you fall down, the more they'll buy. But this is only applying for the ETF. You cannot look for individual stock. Some could be junk REIT. Like that, you buy low, it may get lower. So that's why this is like you're buying 20 plus REITs together. This like you have got 50% of your REITs protected by Akong called Temasek. Okay, if you have trust in Temasek, every time it gives you a discount, this is called Great Singapore Sales. By the way, Great Singapore Sales is ending soon. Shopping, in Singapore, huh? But the great Singapore sales for the stock still ongoing, huh? Yeah, so sometimes you can look at your personality, whether to buy low or to buy high. It doesn't matter. Right? To buy low here, you can look for the support, draw some support. Every time kind of support, you can buy, in batches, or you can wait for the recovery signal, right? For the trend to recover first, which right now is also happening, huh? Especially right now, USA is getting more bullish, right? Also leading the Asian stock market become stronger. Dr. T, thank you for sharing 2 index so far, right? ES3, the STI ETF, and the SRT, the REITs ETF. How about for individual dividend stock? Okay, these are the 4, right? Just now we're talking of the big 4 here. So CICT and MIT, right? These 2 will be the 2 I will elaborate further. Right, this is the industrial, this so-called REIT, huh? Right, so technically, nearly half is actually based on the data center, huh? Right, this CICT just already mentioned. Then we got Challenger, which is the electronic retail shops in Singapore, a small company, especially suitable for those small capital investor. Right. If today you're looking for like over 100,000 investment, then don't look at Challenger. It's too small for you. Today you're talking about a few $100s, a few $1,000s. This could be ideal, but patience is required. OCBC Bank. Among the 3 banks in Singapore, DBS, OCBC, UOB, OCBC relatively higher dividend yield. It's more undervalued. Optimism level is also lower. So that's why I select that as one of case study. Okay, let's move on to the 4 case studies. Number 1, CICT. Right, since the 10 years ago subprime crisis, 2 years ago you got another low optimism opportunity. Even now it's not low optimism, but I will categorize as a good opportunity. This is one of the big 4 of the SLT, right? ETF just now. So that's why don't play with this stock. 5% dividend yield, upside more than the downside. 32% optimism. You're using $32 to exchange for 68. But the catch is you need to have a lot of patience. Yeah. So of course, if you can wait for this kind of moment, it will be good. But do you want to wait for Dr. T for another 5 or 10 years later? Right. Even you can see me again 5 or 10 years later, I doubt you'll take action. So that's why no need to time the market. Anything less than the yellow line is a good opportunity. But right now, I would agree that CICT, the trend is still bearish. So look at the TA trend over here. This is a support line near to $2. This is actually the resistance over here, the intermediate. So in the last few months, it has been correcting down roughly by 10% or so. So currently, if you are looking for average down, it's possible. For example, if you're entering 2.1 or $2, every 10% fall down, you can be 1,000, 1,000. For example, like here, 1,000, 1,000, 1,000. No need to worry too much. The worst case pandemic already proven to you. Even the shopping malls in Singapore have to close down for probably 2 weeks. Never happened before in the history of Singapore. Still CICT survive. And in fact, the rental income, when it affected, for that pandemic year, right now back to normal already. 5% dividend yield. It's as if you got a printing machine, money printing machine. Every $100 can print $5 for you. Are you happy? We're not talking about capital gains here. There, you see, your capital gains will grow over the years, but there are certain years it could be sideways, it could be bearish. So buying this kind of stock, you need to have patience. If you cannot average down, you can wait for the price to be more bullish. So I'm okay for you to wait for CICT, this price to turn upward first. Right now, it's still bearish, even based on today's price. Is it okay, everyone? All right. So say goodbye to CICT. How about Dr. T, the next big 4 of SLT? The next big 4 is called Mapletree Industrial Trust, MIT. Okay, nowadays they also extend the business to data center. They rent out, they are building for the the storage of the data center. So if more this online services, so their clients actually demand is more and more. And 1 year ago, they have I think purchased roughly 14 to 16 new data center in USA, and that actually become their new growth engine. Okay, not just based on industrial park and so on. So this is a reason why MIT right now the dividend payment getting higher and higher. And the good news is even you missed the low optimism 2 years ago, right now quite near to that 27% optimism. Don't apply like rocket science. Okay, rocket science say, oh, Dr. T, I must buy below the green line. So I must wait for 25% optimism. I must learn from you to buy at this perfect point. No need lah. Anything less than the yellow also already good. Right? You are using $27 to exchange for $73. And if you know how good is MIT, right, and then you know who is behind. There are only 4 Mapletree in Singapore. Now become 3 lah. Mapletree Industrial Trust, Mapletree Logistic, Mapletree Commercial Trust, which combined with the other one, the North Asia, become MPAC and so on. Huh? In future, there might be new Mapletree coming out. Right, but this is actually a proven strong REIT in Singapore. And the best thing, the giant fall down, and the best thing, giant is gradually recovering. Right, but the sad news is you analyze until paralyzed. Right, you still don't know, Dr. T, can you tell me tomorrow will it go higher or lower? Then I say I don't know. I don't have a crystal ball. If you have a crystal ball, can you lend to Dr. T? I'll let you know whether price tomorrow will go higher or lower. So that's why a lot of people want to predict the future. No need. You based on what you know about business, what you know about optimism. In fact, my Dr. T 55 styles talking about understanding about the business, the share price, right, and use that to make this so-called take calculator risk to make a decision. Right, even you cannot so-called decide, you can either average down. For example, even assuming you buy $3, right, you drop to 250, you buy another 1,000. 250, if it can drop to $2, you buy another 1,000. Understand? You can average like there 1,000, 1,000, 1,000, 1,000, 1,000, 1,000. Assuming it drop again, then another 1,000. You collect 5.2%, but don't every day monitor the share price fall down lah. Right, now you look at here. No one can guarantee you will not fall down further, but your upside more than downside. This is already protecting you. Is it clear, everyone? Dr. T, I still a bit so-called Kiasi. Kiasi 1, don't buy low. Kiasi 1, please buy higher, average up. Understand? Average up, Kiasi. Today we are Kiasu. Kiasu means afraid of missing a boat. Then apply the averaging method. Understand? You can also average down plus average up. Combine two together, protected by a defensive business. If you worry MIT may go bankrupt, you worry Singapore no people want to rent the industrial park anymore, you worry Temasek may go bankrupt, fine. In that case, you can actually buy entire Singapore through the STI. You must take one of the action. Today you do all kind of analysis, you can attend 100 different talks, but at the end you got 0 action. Your result is still 0. Your $100 is safe in your bank, but your $100 forever is still $100. The worst thing, inflation will erode your return. Your $100 next year will become $95 because inflation is like 5%. Is that clear? So Dr. T, I finally understand what I'm talking about. There's no free lunch. Each of us, we are fighting against the uncertainty of the future. But if we understand all this hidden opportunity given to us, if we can take calculated risk, that will be best for us. Okay, now we move on to the next two, which are non-REITs. One is the one of three major bank called OCBC. Look at the last 20, 30 years. If you can follow Optimism, year 2000 .com bubble to sell, year 2003 SARS and Gulf War to buy, 2007 can sell, 2008, 2009 subprime crisis can buy, 2011 can sell. Right? Although this one nearly hit low optimism, have not hit. There's still a relatively good buy. Then 2018, a sell, pandemic, a buy again. Yeah, in fact, Dr. T went graduate, right? Considering this OCBC Bank around $8 plus. $8 until here, capital gains $12 already 50%, plus 4 to 5% dividend yield every year. Right? Why need to analyze until paralyzed? Right? Can you close one eye? 47% optimism still give discount, but DBS, UOB, both of them do not give you the discount. OCBC Bank still give you the discount. Among the three banks, this is the highest yield, 4.3%. But right now, with interest income getting higher, likely the payment will become more and more. Huh? Yeah, in fact, recently, I think just a few days ago, right, they're announcing better result. Among the three banks in Singapore, OCBC, the growth is the strongest, okay, so far. Huh? Okay, but we are talking about investing over here, meaning you need patience. We are not talking about weeks or months, okay? All right, so look at technical analysis. The share price not only supported around $11, and even today the share price is around 12.4 something. I almost want to break the 12.5 resistance here, meaning this stock you want to do trading also can, not just for long-term investing. Although we are talking about today about creating a defensive portfolio, you can use the STI ETF, you can use the SRT ETF, you can use the MIT using the CICT, you can use the OCBC Bank, plus this challenger. Already got 6 stocks. Not enough? Later on, Dr. T will give you a chance to learn further from Dr. T. Huh? Okay, so come to here, challenger. All right. For those of you, if you don't come to Singapore, may not know about challenger, selling electronic stuff. Okay, so during pandemic, right, the sales even better. And during pandemic, it dropped to low optimism. Great opportunity. Even at now, still a low optimism. But the share price has already gone up probably by maybe another 50%. Right? But currently, if I can zoom in to this portion, this is actually an excellent opportunity for whoever patient. Right? It can give you 5.2% dividend yield. It's now forming, we call it the ascending triangle. Okay, you see the higher low. Recently, a few days ago, it dropped to around 53 cents. Right? But it's aiming to break the 60 cent resistance. It may go like that, you know, for the next few months. So you have two ways. You can buy near to the support here. Every time come to support here, you can average down, or you can actually wait until it breaks 60 cent, like 61 or 62 when you enter. But of course, at 61, 62 cent, your yield may drop to like 4% only. Huh? Is that clear? Yeah, but this stock has a few limitations. Number one, this is a small cap. Number two, the public float is limited. Right, because the majority shareholder, like the Lu family, right, the big four, right, they're controlling almost like 80% of the shares. Roughly 3 years ago, they tried to delist Challenger, but because of one like Pangolin Fund, tried to stop it. At the end, missed by a few percent of the support, so could not delist it. Right, so right now, they may not be so generous to pay dividend. Okay, although the company still make good profits. Yeah, so but if they are reluctant to pay dividend, right, not to worry. A lot of people thought dividend stock must pay a lot of dividend. Not quite. They can retain their earnings, but then it will become a growth stock. Okay, but if you are looking for longer term investing, this stock, although I would say the potential of delisting is also there, but since it failed 3 years ago, it will take time. Okay. Yeah, so if you're okay to collect, may not be 5.2%, assuming they may cut down on dividend despite making money, assuming to 4%. Are you okay with 4% dividend yield? All depends on you. So you add up all the 6 stocks we mentioned early on, in average 4 to 5% dividend yield, it may be a roughly 5% dividend yield. Are you okay to have a portfolio? Although I cannot say cannot lose money, you may have some capital loss at a certain point of time when the price is bearish, but more importantly, this can form some of defenders. In future, you can learn further from Dr. T, like how to form like these defenders, midfielders, and strikers. Okay, just for whoever want to learn further from Dr. T, you can go to Investing Note to connect to Dr. T, right? And then you can also visit my website, en55.com, to download free 2 ebooks from here. I can learn further, because today I can only have time to cover this so-called the dividend investing. For example, you go to the Investing Note website. Yeah, this is you can click like follow here, right? Then these are my articles. Every few weeks, I'll write some articles like defensive stock, undervalued stock, right? The impact of inflation and so on. Okay, right. At the same time, right, you can actually also download the 2 ebooks from my website, en55.com here. Okay, so my plan this way, I will open up for Q&A. Right, and thank you for all your attention. Thank you.
Thank you so much.